Morning and welcome to One Financial Markets Morning Commentary. I'm Andrew Johnston. We're just going to go over the news highlights of yesterday, market moves from yesterday, and what's going to happen on for the rest of today. So, notable highlights yesterday was the dollar crash again. Euro, sterling, anything dollar related really, all finished higher in the day. If we look at the euro chart here, we see we're still on the upward trend. Making new highs of 118.50s. We're now looking at probably the 120 level, and we have to take into consideration here how this is hurting Germany. Germany is a major exporter, and the high currency will, of course, conflict and will hurt their ability to export goods. So there will become a stage where the euro will be too high, and Angela Merkel will have a little word with Mario Draghi and say, I need this currency down because it's hurting the companies in my country, and something will have to be done about it, because Germany is effectively the Bank of Europe. They underwrite everything, the debt. They're the go-to country when people are in trouble, or most of the Eurozone is in trouble. So this inflated euro at the moment around this level, based on predominantly the massive dollar sell-off that we're having, but it will have a crunch time, so we'll have to wait out for that. We do have some German figures out this morning, 855 unemployment and manufacturing. PMIs, once again, I've said over the last couple of days, I think the figures are pretty much redundant unless they're really, really out. This is a whole fundamental move here in terms of the dollar. And if we just look at the dollar index chart here, we are now, haven't been at these lows since March 2016. And if we bring the chart out a bit further, anything below where we are now, as you can see in this point here, we're now looking at a void to where dollar was trading in 2013, 2014, and anything can happen in there. As you look at it, we can just see these areas of here on the technicals. There is no support whatsoever. This is a big void waiting to happen. So we look at these sort of areas here. It's not going to happen overnight, but it's the dollar index. This is against certain currencies is on a downward trajectory. We can look at the channel pattern here. It's all pointing downwards, and it doesn't look like it's going to change for a long time. However, other currencies paired with these, like the euro and the sterling, will all have inflection points where they will need to basically realise where they are in the market themselves, not just get against the dollar, and act appropriately. Big news overnight, Scaramouche, Donald Trump's communications secretary, or has been given a sack after his foul-mouthed rant about his peers. Not a surprise really, he had to go. I thought he'd have been quite good for Trump, but obviously he went too far. I don't know how Donald Trump can say people are going too far with the stuff he says on Twitter, but yeah, all very interesting. So he's gone. We had Dow's making new highs again, and basically the dollar index, the dollar getting smashed is lovely for people who want to invest in the US. And so once again, as I say, people are going after yield. The yield is in equities, and that's why it's getting pumped up. Overnight, we had the RBA decision, no change to the cash rate. But there were some, RBA says that the Aussie dollar, the high Aussie dollar does weigh on the economic outlook, so had a small pullback, but we're still through that 80 level, and it doesn't look like it's stopping either. So once again, that's assisted by the huge dollar sell-off that we're having globally at the moment. And this, I think, just kind of puts everything in perspective, that we keep getting better and better levels to get short in this market. But the consensus is that people just don't want to own dollars, and they want to put it in, don't own dollars at this level. So once again, as I said, there's going to be inflection points. We have to be careful about this because we're getting into really good areas of selling opportunity. but the dollar sell-off globally is just conflicting against these at the moment. So when you have market moves like this, you've got to go with the flow. You can't try and fight it. So if everyone's selling dollars and buying euros and buying sterling and buying Aussie, you cannot fight that. So you've got to jump on it and go with the flow. Notable data out today. Like I said, German manufacturing in the States, we have core personal income and core PCE price index stuff. Once again, I don't think it's really going to make a difference. The consensus is the equity market in the US is going up, dollar's going down, and everything else is against that is going up. So the one thing that we have to be wary of, because FX is seemingly taken care of now, the direction is until someone tells us it's not, that's the direction is going is up for euro and down for dollar. But we have to be, once again, look at our precious metals in terms of gold. Like I said yesterday, we're still in this lovely pattern. It's still holding. And we had a nice comment from Reuters yesterday saying North Korea can hit most of the United States with its ballistic missiles. So stuff like that sitting in the back of your mind means, yeah, okay, you might go long equities. Yeah, it might be risk off. But I probably want to own a little bit of gold just in case of anything catastrophes that can happen. We know Trump can say stupid things at a moment. He might have a couple of glasses of wine too many, and all of a sudden he's having a Twitter rant, and Kim Jong-un just gets a bit annoyed and presses the red button. So we like to own a bit of gold while all this is going on, just as protection against the madness out there. That's about it from me today. We'll see you again tomorrow in the front lines, but have a good trading day.